We use them every single day, right? The social media platforms, the search engines, the online marketplaces, they're a huge part of our lives. But have you ever stopped to think about whether these global tech giants are paying their fair share of tax right here in the UK? It's a massive question and one that's been bubbling under the surface for years.
And this wasn't just a quiet murmur. This question was being asked everywhere, from living rooms to the very halls of Parliament. There was this growing feeling that these huge companies were making billions from UK users, but when it came to their tax bill, well, it just didn't seem to match up. This concern is exactly what led the government to create a completely new, and let's be honest, pretty controversial tax.
To really get to grips with this, we're going to be drawing on an expert analysis put together by the specialists at My Tax Accountant. They are absolute leaders when it comes to UK tax guidance, so their insights are going to help us unpack what this tax is, who it really affects, and what it all means for businesses across the country. All right, so here's our game plan. First, we'll set the scene and look at the big question that kicked this all off. Then, we'll nail down exactly what the digital services tax is and, crucially, how it works. After that, we'll dive into the real-world impact and the controversy it's caused. We'll also ask if this tax is here to stay. And finally, we'll wrap up with the key next steps for you.
So first things first, let's tackle that big question. Why on earth was this new tax even necessary? To really understand the solution, you've got to understand the problem they were trying to solve. And this quote from the UK's National Audit Office, it just hits the nail on the head. For years, there was this sense of, unfairness. You had these massive multinational tech companies generating incredible revenues from all us here in the UK, but because of the way old-school international tax laws work, their UK tax bill often looked tiny in comparison. It was that disconnect that finally pushed the government to act.
So what was the UK's answer? It was the Digital Services Tax, or DST for short. Now, this was a bold move because the UK basically went it alone, creating this tax without waiting for a global agreement. So let's break down what it actually is. Put simply, the DST is a 2% tax on the revenues, and that's a key word, revenues, not profits, that these huge digital companies make from UK users. The really clever part is that it applies whether they have a big shiny office in London or not. It's all about where the money is being made, not where the company is based.
Now, it is absolutely crucial to understand this is not a tax on every online business. Far from it. It's incredibly targeted, focusing only on these three specific business models: social media, search engines, and online marketplaces. You see the common thread? They are all businesses where the value really comes from us, the users, and our data.
Okay, now let's look at how it works in practice. When you get into the numbers, it becomes crystal clear that this tax is designed like a laser-guided missile, aimed squarely at the Goliaths of the tech world.
First off, to even be on the radar for this tax, a company's entire global group needs to be pulling in more than £500 million in revenue from these digital activities. That is a massive threshold that immediately knocks out pretty much everyone except the biggest household names.
But wait, there's more. There's a second test. On top of being a global giant, more than £25 million of those revenues have to come directly from UK users. So you have to be huge globally and have a major presence right here in the UK market. So if and only if a company jumps over both of those very high hurdles, they'd then have to pay the tax. And it's set at 2%. But it's not on all their UK revenue. The tax only applies to the amount above that first $25 million, which acts as a tax-free allowance.
Now here's a pretty clever little feature. The tax has a built-in safe harbor option. Think of it like a safety net. If a company has huge revenues in the UK, but is making very low profits, or even a loss, this option lets them use an alternative way to calculate their tax. It's a smart way to make sure the tax targets profitable value, not just revenue for the sake of it.
Okay, so we know who the tax is aimed at, but who really ends up paying the bill? And who feels the effects on the ground? Well, this is where it gets really interesting, and where we see the international controversy it kicked up. In its very first year, the DST brought in £358 million for the UK Treasury. That figure alone shows you the sheer scale of revenue being generated from UK users that, before this tax, wasn't really being taxed in this way. And that number has stayed pretty hefty ever since. And this chart tells an incredible story. It shows just how concentrated the tax is. In that first year, just 5 business groups paid for a staggering 90% of the entire DST bill. 90%. This proves the tax is doing exactly what it was designed to do: land on a very small number of very, very large companies.
As you can imagine, this did not go down well over in the United States. The UK's view was simple. This is about fairness and taxing the value that our own citizens help create. But the US government saw it very differently. They argued that the tax was discriminatory and specifically designed to target successful American companies, tearing up the international tax rulebook.
And this wasn't just a quiet disagreement. The U.S. Trade Representative launched a full-blown formal investigation. They pointed to language used by UK officials about targeting established tech giants as proof that this tax was intentionally created to hit US firms, while conveniently missing any big UK players.
But the impact isn't just about geopolitics. It hits home for small businesses right here. Think about it. The taxes on the tech giants, sure, but what's to stop them from passing the cost on? And that's exactly what many of them did. All of a sudden, a freelance graphic designer in London running ads sees a new UK DST fee on her invoice. Her costs go up, and that directly eats into her profits.
Now stay with me here, because this next point might actually surprise you. Despite all the headlines and all the money it's raising, the digital services tax was never meant to be a permanent part of UK law.
You see, the DST was always just a stopgap. It was a tactical move, really, designed to put pressure on for a much bigger global solution. That solution is a huge international project called Pillar 1. The goal of Pillar 1 is to rewrite the global tax rules for the 21st century, so countries can tax a fair share of profits from the biggest multinationals no matter where they're based. The plan is that once Pillar 1 is up and running, it will replace taxes like the DST, and with a mandatory government review of the DST taking place in 2025, its future is being decided as we speak.
So we've covered a lot of ground: what the DST is, how it works, the controversy, and where it's all heading. So let's bring it all home. What are the most important things for you and your business to take away from all this? Okay, let's boil it down to 3 key points. First, and most importantly, your UK small business is not going to be paying this tax directly. It is absolutely for the mega corporations. Second, you might be paying for it indirectly, so it's smart to keep an eye on your invoices from the big online platforms for any new fees. And third, remember this tax likely has an expiry date. The world is slowly but surely moving to a new global system.
And just before we finish, a really important note. This has been a general guide to help you understand the topic, but tax is incredibly complex, and everyone's situation is different. So please don't rely on this information alone to make any financial decisions. To really understand how the digital services tax, or frankly any tax issue, affects your business, the best thing you can do is talk to a professional. For expert advice that's built around your specific needs, get in touch with the specialists at My Tax Accountant. You can give them a call on 0208-570-8531 or drop them an email at info@mytaxaccountant.co.uk. They are ready to help.